Is inflation really the big bad wolf of the financial markets that we've been led to believe? It's a common perception that inflation, with its power to erode the purchasing value of money, is a financial market's worst nightmare. But like many things in the world of finance, it's not that black and white. Now, let's turn our attention to some recent data. The latest Consumer Price Index, or CPI figures, hint at a possible downward trend in inflation. This is a significant development because the CPI is a key measure of inflation, and these figures are closely watched by market players. As soon as these numbers hit the newsstands, the markets responded. Investors cheered, market indices rallied, and an air of optimism started to pervade trading floors. Why? Because lower inflation can signal stronger purchasing power and greater economic stability. But what if this fall in inflation is not a cause for alarm, but rather a reason for optimism? Let's delve deeper into this in the next scene. The recent CPI figures have created a buzz in the financial world. Let's understand why. CPI, or Consumer Price Index, serves as a measure of the average change over time in the prices paid by urban consumers for a basket of consumer goods and services. It's a vital indicator of the health of an economy. So how do we interpret the latest figures? The current CPI figures show a gradual decrease in the rate of inflation. In other words, the pace at which the average price level of a basket of selected goods and services is increasing has slowed down. When compared to previous periods, this trend suggests a possible easing in the inflation rate. This is significant because inflation impacts everything from our purchasing power, to the interest rates on loans, to the return on investments. But how does this impact the financial markets? A falling trend in inflation can indeed be good news for the markets. Here's why. Inflation, in simple terms, is the rate at which the general level of prices for goods and services is rising. When inflation is high, your purchasing power, the real value of your money, decreases. This means you can buy less with the same amount of money. Now, when inflation begins to fall, the opposite occurs. Your purchasing power starts to strengthen. This means you get more bang for your buck, which can boost consumer spending and stimulate market growth. Investors, always on the lookout for signs of economic stability, are reacting with optimism to the potential inflation slowdown. Lower inflation figures can trigger bullish market trends, encouraging more investment and further propelling economic growth. So, as it turns out, the falling inflation trend could be the hero of our financial market story, not the villain.